Good morning, ladies and gentlemen. This is Butch Shorak, Options University. Monday, December 16th, 2013. You're actually going to see a little bit of Tuesday on some of our of Monday on some of our charts, as I had computer problems and technical problems and wasn't able to record this till after the opening on a Monday. So this is market forecast, and we're looking at the week of December 16th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Well, looking at last week, we finally had that pullback, that healthy pullback that you get in every market, as we saw the VIX rise during the last week, and the market pull back and then begin some kind of consolidation. What kind of economic announcements are we going to have on the week of December 16th? Well, Monday's loaded with the Empire State taking place before the market opens, productivity and costs, and PMI, all that before the market opens, and industrial production. Monday, big day in the market prior to the market opening. This is Fed Week, the last Fed week of 2013. So that begins on Tuesday, and we also have CPI coming out at 8:30, and we have a housing market index coming out at 10. On Wednesday, we continue with news as we have the housing starts, and of course at 2 o'clock, we get the FOMC meeting announcement, which we really expect will not have a whole lot of meat in it. We do not expect tapering to be in yet, as we're not getting enough out of the market and out of the numbers to make the Fed feel all that secure with our growth. On Thursday, we have our weekly jobless claims. It comes out at 8:30. Philly Fed coming out. Existing home sales and economic leading indicators for the month of November coming out at 10 o'clock. This is options expiration week. As a matter of fact, it's quadruple witching, and so we see that taking place on Friday. GDP coming out at 8:30. And that's the extent of what we can see happening during the week of December 16th. Now let's take a look at the SPX. Remember that we are still in an uptrend in the SPX, as the 30 is above the 50, is above the 200. Nice little bull pattern taking place. What you're seeing here, this last one, is Monday as the market begins to take off. What did we have last week? We had a down cycle in the market, as the market did what markets do so well, came down, found support over here from late October, early November, and that's where we got our bounce in the market, which took place on Monday morning. Looking at it a little closer and with a little bit more detail, it looks something like this. Looking at a 1-month chart, there we have a high was reached on Monday, and from there it just kept pulling back further past the 30-day moving average, and then Thursday and Friday really trying to build some kind of base, which you remember where it picked up October, early November. Here's the beginning of the market on Monday, as we saw the market had a nice big move up as the SPX started showing some of that strength in this bull market. Where do you think we're headed? Well, we're headed right toward our previous highs. Looking for 1820 to 1830 between now and the first of the year. And then after the first of the year, expecting that to climb even higher. And we'll talk about that later. Looking at the Dow, we see that Dow looks just like the other index. We had our high on Monday, pulled down, didn't quite hit the 50-day moving average, and then here's our Monday candlestick showing us the big move. Notice that's the 16th, so we're getting a little added information in this market forecast. Looking at the NASDAQ, we see that we have exactly the same kind of thing, although it did give us kind of a hint. Only came down to the 30-day moving average. It gave us a hint that we could have a move back up, as we got a higher high and a higher low on Friday out of the NASDAQ. Next, let's take a look at the Russell 2000, see what that gave us. And looking at the Russell 2000, we see that, again, we got that hint on Friday that the market was ready to turn around with our entry on Friday with a higher high and a higher low. And then here's our Monday candlestick moving up higher, back up to that 30-day. Russell 2000 did come down to the 50-day moving average. What would we expect the VIX to do as the market was pulling back? Well, we would expect that what the VIX would do is rise, and that's exactly what this did. Our contrarian indicator showed us what happens as the market pulls back. The VIX goes higher. We can expect that that's going to come back down, but notice we didn't have as low of VIX, but we can't take a whole lot of readings out of that. Expecting the VIX as the market goes up to pull back and headed towards the Christmas Santa Claus rally. What did our individual sectors do during this past week? Well, let's look at the bond market. And looking at the bond market, we see that it's doing the same thing it's been doing, little or nothing, getting kind of tighter ranges, a little bigger range here, then a little less of a range there. And, you know, this thing's waiting to explode, but what's going to make it explode? Well, it's going to go one way or the other, and it's going to be based upon what the Fed does when the Fed makes this move, expected maybe sometime in the second quarter of 2014. We'll update on that as we get closer to that date, but at this moment it doesn't look like we're going to see anything before that. Looking at gold, let's take a look at gold. And we see that there is no big flight to safety and heading for gold, as gold is very near its lows for the year. What kind of volume did we have during the last week? Well, we saw we had big volume as the market pulled back, but as the market got lower and lower, look what happened to the volume. Our small range days, which were Thursday and Friday, look, we had less volume than the day before, less volume than the day before. Today's our expansion day, moving back up, and targets up here in this range up here is where we expect the spider to go. Let's take again a look at the financials, see how they correlated, if they correlated with the SPX and the overall market. And so we look at our financials. XLF, our spider ETF, we see came down to the 30-day moving average and now bouncing. Notice this high is lower than this high, and so we'll see whether we can break on up through during our next expected Christmas rally. What's oil doing during all this? Well, we know oil's gone up at the pumps. Let's see what it's done. Oh, yes. There's where that move came at the pumps as we saw oil move back up into that range. USO, our ETF for oil, was approaching, got over 35, and now has pulled back a little bit. But we were all the way down to 33. So that's where we see the big money flowing, as they're not talking any longer about gasoline being less than $3. So for those of you that are gold members, stick around and we'll go through our stocks to watch, see what they did during this pullback week. And for those of you that would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. So with that thought, this is Butch Shorak. Remember, it's options expiration week, quadruple witching expiration week, and most of all, it's the last Fed meeting of the year being exposed at 2 o'clock on Wednesday. So with that, thank you for being here. Butch Shorak, Options University, Market Forecast.